More interesting picks in the stock area this week, no exception. Nick, since you're the newcomer to the group here, we're going to start with you once again. You're actually looking in the, auto supply area, huh?
Yeah, Gentex. Why do I like this stock? Well, first of all, what does it do? It makes mostly mirrors for cars. It also does some things in aerospace with windows, dimmers on windows, and some fire-related products. But it's mostly an auto manufacturer. Mm-hmm. Why do I like it? Basically because I think it's inexpensive, and I think the auto sector has some tailwinds, and there's some international exposure. So why is it cheap? Basically, it's trading about 16 times forward earnings. The average has been about 22. Pays a nice dividend of about 2.4%. Historically, it's been able to cover that, so you can get a little bit of yield on it. Mm-hmm. It basically has good growth historically. It's grown about 19% at a compounded annual rate, and it has some exposure to the overseas auto markets. And so I feel that it's got a good fundamental story. On top of that, technically, it's been a kind of consolidation pattern here recently. And if you look at a lot of stocks, they've kind of gone up. This is a ZAX one that's kind of traded sideways and looks like it's consolidating. So I'm hoping what you're going to do is get a breakout here, and it can get some of the tailwind of strong auto sales and kind of the pent-up auto demand, and that can play out in higher stock prices going into the end of the year.
Interesting. All right. Well, Todd, you have an auto retailer.
Yeah, kind of in the same space. Lithia Motors, LAD is the ticker symbol. Agree with the story on autos, and I think domestically too. There's a lot of tailwinds to be had. The company actually just came off its 14th consecutive positive earnings surprise. The company has 91 locations in 11 states, so they're actually the 9th largest auto retailer in the country. But very solid earnings momentum, like I said, as people continue to buy both new and used cars. The company sells both. And they saw very solid increase in revenue turn into huge bottom line growth as the company leveraged its fixed expenses. So great operating leverage here, fantastic earnings momentum, and the company actually increased its guidance for the remainder of the year after its latest beat. That prompted analysts to revise their estimates significantly higher, sent it to a ZAX rank of 1, which is a strong buy rating. Mm-hmm. And in addition to that, they traded just 16 times forward earnings, very reasonable multiple given the growth potential here. This could be strong total return potential in this name throughout the rest of 2013.
All right. Talk to me about pollution control.
Yes, I would have loved to have some cyclical exposure too, but this is more of a defensive play. Calgon Carbon, it's an industrial company, about $1 billion in market cap. More of a defensive play. So it has some equipment sales which moves with the PMIs and the cyclical industrial economy, but broadly very counter-cyclical. They were profitable through the 2008-2009 downturn. And if things turn south or just stay kind of weak, they will continue to chug along. So it's more of a defensive play. And then it is a play on the regulatory, more stricter environmental standards, both air, water, food, and all of those good things, not just here in the U.S. but globally. So they remain well positioned. Particularly the newer standards, the so-called MATS standards from the EPA, where they domestically remain well positioned. So overall, a defensive industrial play, a little bit under the radar and relatively on the small cap side.
All right, thank you all for that. Nick, once again, welcome to the group. Hope to see more of you here in the weeks to come. And don't forget other stock picks on Zax.com, our website. If you're watching this video out in syndication land, get on over. You can access them right off the home page, Zax.com. Check them out. With everyone here, I'm Terry Ruffalo.